everyone. Welcome to the latest installment of MSP Business School. I'm Brian Doyle, and with me, as always, we've got Tim McNeil and Rob Rogers. What's going on, gents?
Pretty good, sir.
Yeah, how you doing?
Cannot complain, man. As we're recording this, we're getting close to the holidays. So, just winding down the end of the sales year, right? And I'm sure you're doing the same. But with us today, we've got our special guest, Abe Garver. It's always great to have Abe back on the podcast. We've now got this into kind of an every 6-month rhythm, Abe, because there's so much activity happening in the M&A market. We got to have you on regularly now. The awesome one would be down to a quarterly review, right? But
exactly.
With that, I know that you've been hitting the trade shows, talking to the MSPs, talking to other buyers out in the marketplace, and there's a lot of buzz around where M&A is going, and certainly where M&A is going during what perceptionally are becoming kind of inflationary times, or dare I say recessive times as well. And what does that mean to a market that relies on capital to make acquisitions, and how does that impact valuations? Those are some of the questions we're hoping you might be able to answer for us today. So welcome.
Great, thanks so much. And I'll just give a brief background too as we kick this off. I'm Abe Garver. I'm the MSP team leader and managing director for Focus Investment Bank. We have been, just had an exceptional run here for the past several years with MSP M&A. Have been fortunate to be the catalyst for and advise on MSP transactions with 53 parties. And that includes 10 platform investments by private equity groups. For this, I would say kind of headline for our discussion, valuations have really not been impacted by what's going on, kind of the macro economy. Really for two main reasons. There are more and more buyers, private equity group buyers, continuing to come onto the scene, and also founder CEOs are rolling more equity when they do the platform transaction. Kind of from 20% was the average 18 months ago, and it's moved to about 30%. So there's just a real scarcity of assets. And just a tidal wave. I was saying as we were just prepping for this conversation, I've had 12 buyers that new buyers come to me just over the past 15 days. So it's just there's just a ton of demand for great MSP assets.
Amazing.
It's amazing. It's absolutely amazing.
Yep, the wheel never stops spinning, right?
Yeah.
So Abe, I think you've got some statistics that you want to share that go even beyond what you just explained to us as well. Do you want to bring those up? And for those of you that are just listening, we'll make sure that we get this deck hopefully linked up. But for those of you that are watching YouTube, you'll be able to see this right now.
And just a couple slides. So just to kind of reiterate what I just said, and first just a quick snapshot of our MSP team leadership group within Focus Investment Bank. Just really incredible colleagues. I have about 10 full-time on the team and 19 in the firm out of 75 employees in the firm have worked on MSP transactions with me. Over the past 3 years, we've been the catalyst for and advised on MSP transactions with 53 parties, buyers on the left, sellers on the right, including 10 platform investments. And interestingly, as the size of the private equity group seeking to make an investment has grown from $500 million funds to this year, we've done a lot of work with billion and billion five funds. We've found it necessary to do what's called mergers of equals with MSPs to help them get to the size that the private equity group can make an investment. And looking back, this really helps to kind of frame our discussion. This is a kind of reverse waterfall of private equity investments into MSPs going back to 2014. It really started to take off in 18 with Evergreen Services doing 6 that year, and doing tuck-ins into them after. Focus got active in 18, and by 20 we were the catalyst for 4 platforms, advised 5th on the buy side, and have done several platforms every year since then. We're getting, as a community, we're kind of creating about 20 new PE-backed platforms per year, and I see this number getting to 200, but not not more, because there are larger and larger private equity groups coming in that will consolidate the existing platforms. And I'll just touch on too, from a valuation perspective, kind of what's driving, what's happening. Initial platforms are in the 2.5 to call it 5+ EBITDA range, trading for 10 to 11.5x at close, and there may be some other kind of kicker in there. And then on the left-hand side, they're buying the multiple down with add-on targets, and the initial goal is to get to 15 of EBITDA and recapitalize, have a larger private equity group come in at that point.
Amazing. You see some of those multiples versus
those multiples, man.
I mean, how much have you seen those multiples jump since 2018, since you really started getting into the MSP side?
They've really come from, some of the initial platforms were still, even back at that time, I'd say 8x to 10x range,
So
at
still
2.5. But now it is, it is definitely, there's so much competition. I had a merger of equal platform that's closing here shortly. Had let's see, I had 65 signed NDAs, so 65 live buyers competing for it. 10, call it 10 offers, and then just a couple people that we had invited to management meetings and more that wanted to come. So there's just intense, you have to create that competition, and that's part of my, that's part of my role. These valuations, absolutely just don't happen at an arm's length, kind of a buyer calling a seller, and they wind up at that multiple. It's all of those kind of trades I showed are, I think there's 17 auctions I've run at this point, and it's keeping, what's really important is in running the auction, like of those 10, I know how the 10 that bid, I got 9 runners up. So the next time I go run a platform, I know how they have behaved, and kind of, are they getting one of the platform transactions we closed a couple months ago, the winning bidder had lost for a period of 2 years on 3 different attempts. And I said to them as the 4th one started, I've seen this movie before with you, and I don't want to watch it again. And they, at that point, to win, like many of the bidders that are actually winning have had experience in processes and are figuring out what it takes to kind of like get the home.
Do you see the word auction is just not something, I mean, it makes sense to me. I just hadn't heard that before today. Yeah. Is that something there, again, just more curiosity on my end, is that something you saw back in 2018 all the way through here, or is it more consistent now, I guess is really my question?
Yes. And it actually, I was with a group of advisors, all meeting with MSPs, and they were from other firms, and it really forced me to kind of think about how are we different. And really three things, jump out at me. One, the advisor kind of is your, like, how to choose a MSP M&A advisor. The first question is, does the person spend 100% of their time focused on the MSP market, is one. 2, have they done, and this is a formula, 2 and 3 are a formula that get to 100. so question 2 is, have you done 10 transactions in the past year? If so, you can count the 10, and you're now in question 3 going to multiply by question 3 is, can you show your prospective client how many inbound emails you get from MSP buyers during a month that want to make a platform? I think those 2 are really important. Like, are you out there running the auctions, and do you have the inbound kind of interest? And so for us, I've had 12 new buyers contact me in the past 15 days. So annualize that, I'm probably at a 200 on this scale, but you only need to get to 100. There were advisors I was with, that this was their 3rd MSP assignment. They just don't know how these buyers behave if they haven't done it 17 times in auctions in the past, kind of three years. So we've always run auctions. But I would say an MSP founder CEO may hire someone who's less expensive than we are, who they get hired, they prepare the book, it all looks great, but they don't have a running list of all the buyers that are trying to get into the market. And so now they go out, and the bids that they're going to get are sub, kind of best in class.
Wow.
So as we've grown, I see that more and more as a competitive advantage. I get on the phone with people I'm contemplating working with, and I show them, I got 65 signed NDAs here in this assignment from all these buyers, and we're going to get people, kind of bidding. And I'm solving for 4 things. It's a financial fit, the strategic fit, geographic fit, and cultural fit. So we want both the customers, kind of for the founder CEO, we want a better situation for their customers and for their employees. And I find when we put a lot of options in front of our client, there's one that always rises up to the top, which we want to get into signed letter of intent with. And then ideally there are multiple backups if something breaks down in that, kind of breaks down in the process to close, to switch to.
And that's an important point there, Abe, I think, when you look at the process, right? Because so many deals break down in the 11th hour, and usually it is because of cultural or financial fit are the ones that I've seen most prevalent out there. So by having a pool of customers where you can really play, I hate to call it matchmaker, right? But matchmaker for both sides of the equation, and making sure that they're getting the right fit and reducing some of the risk around, those 4 different, things that you look at there, that can be risk indicators. That's got to be a great selling point for you, but also a very important consideration for those that are looking at entering the market. Because like you said, I see a lot of guys that say, I'm an M&A advisor, and you get down to it, they put together 2 deals, and one of them was them buying a book of business from somebody else, and they just haven't had that breadth of knowledge to really understand where a deal is going to break down, what are the things that make a good deal, and how do you make sure that these 2 parties are going to be successful post-transaction as well.
Yeah.
I have a question for you. So that the MSP, or the buyer who lost 3 times, that kind of changed up their strategy on the 4th time, what did they kind of change to make themselves more attractive? I'm sure it's not just money, but like what did they do, globally speaking, besides just changing their processes to kind of help themselves get higher to get that deal?
Yeah, one thing that jumps out at me, like they were the first, one of the first ones I worked with them. I was helping them be preemptive. I had known them for a decade, and found, it's actually somebody that did. They were working, trying to be an investor in Willis Canty-Tech's business that we've had on before, and they were going really, 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 really slow. Like we were doing this, initial data request, and they were just kind of just really just too wound up in the numbers. And while that was happening, Willis on his own had somebody approach him around the same time he started conversations. They made an offer while these people I'm working with are still sitting on their hands. And I'm like, guys, do you want it? What's the deal here? And so they're, they ended up really wanting it, but they realized that their approach that they may have used in other industries, because the private equity group's probably going to be for any fund in 10 very different investments. I think many of the first time kind of buyers are also the same. They don't know what they don't know about the MSP market. And if if they'll listen and take coaching, it'll work out great. If they don't, it's probably, I try to stay away from buying houses in a market that's just, there are all these kind of offers topping each other. But I think it's maybe similar to that, where access and timing, being there first, being decisive, being able to show that you've surrounded yourself not just with the financial kind of the equity, but you can also bring strategic value. So you might have the private equity group finds a chief revenue officer that's in their camp that can kind of come and be part of the package and like sit on the board of the company, or a past COO. I've seen, I saw the COO of Castle at one point work with a private equity group, or other kind of key experiences that bring value that are not just financial. And so that firm kind of, in addition to getting, kind of learning how the market works, also got more kind of skills and talent around it in ways to show that it could add value, but that wasn't just financial.
That's very interesting to me.
Yeah.
I find, it's so competitive now on the, on the buyer side that, it's the same thing with the MSPs, right? You got to have great communication and great responsiveness for their clients. And now just to hear the other side of it, the buyer's got to have great communication and responsiveness on their side. It's just, it's very interesting.
There's a tremendous amount of similarities there. It's amazing.
Yeah. You just can't, if you're a founder CEO of an MSP, you can't do this on your own. It is not a good idea. And, I would submit it's not going to work. It is, you on each kind of, you look at the continuum of things that have to get done in the transaction all the way to the end, like 2 examples at the end that can if you're in this on your own, you think you're saving yourself a success fee by working with an advisor, you can lose almost that amount in working capital if it's not negotiated correctly. And then it's relatively common to have either you gain customers or lose customers between signed letter of intent and close. And one thing we were talking about right before we came on, this, multi-million-dollar haircut to purchase price because somebody lost one customer and the M&A advisor didn't know what they were doing and basically let the buyer get away with taking a seven times more than the value that they should have. Was the total transaction value was haircutted by 7 times more than it should have been. And if it were us in that transaction, we would have said, oh no, is point one. Point 2 is they'll get put in the penalty box with Focus as if they ever try to buy something again in the future. And point 3, we probably created the platform or have already sold an add-on to them, and have experience negotiating things so that we wouldn't get that, kind of get that outcome. So it's really unfortunate that, there was a situation I was hearing about where people were just like, we're not going to hire an advisor. Okay.
It's
good luck with
there's
that.
so much money at stake, and I always go
Yeah.
back to the concept of you can only sell it once, right? Even if you're retaining equity in the rollover, you're not going to be as in charge of your destiny as you are when you make that initial sale. And to not have somebody helping you in that process, to negotiate, I can only imagine the money that you're leaving on the table and what you were just talking about there. I mean, we were all dying before this call started because it was multiple seven figures that were left on the table. It's crazy.
Yeah. I'd say too, like, choose it as you're picking an M&A advisor, pick the person that's done the best job of marketing themselves, because it's that same skill set that is going to be required to turn around once the engagement letter is signed, sit on the founder CEO's side of the table, and you got to have the skill to market. Like, and I ask people that regularly. Please look at, do a Google search. Are they speaking at MSP conferences? Are they writing MSP articles? Are they involved in the peer groups? What does their LinkedIn page look like? Like, how many transactions are they closing? Do they have, I've got a deal flow of buyers coming in. Do they have that flow of buyers? And why not, if, I feel really fortunate to have, gotten to this place where I have that inbound interest of buyers. Why not take advantage of it?
Yeah.
It's there, and it's, it's crazy how much inbound interest there is. Like, I was just saying to my colleagues yesterday, like, all right, enough. Let me talk to MSP founder CEOs.
Just take a break for a
buyers. No more buyers.
It's interesting that you were talking about that, and we're all involved with Evolve, and they have now built up an M&A peer group just specifically to have that discussion. I saw you were a subject matter expert for them. Is that true?
Yes, it was really neat. The last day of November, first day of December of this year. So a couple weeks after IT Nation Connect, and there were about 28, 28 founder CEOs part of that. And it, for those that don't know, IT Nation Evolve, the peer groups, hands down, they are minting the best MSPs across the country. There are 600 companies that are in the peer groups. We meet quarterly in Phoenix, Dallas, Denver, and then Orlando is Q4. And in between, there's 600, so basically, and call it 50 peer groups of principals. They'll meet Monday and Tuesday, half the groups. Wednesday is a community day when the M&A peer group meets each quarter. And then Thursday, Friday, the other principals of the other peer groups come in Thursday, Friday. And that repeats basically 3 times during the year, and then a fourth in Tampa in Q4. And it's invaluable because you basically get to hear from all of your peers. There's a really great content. But one of the things that's really fascinating, and the last one I was just asked to participate in, 3 of the companies had sold and done transactions, and they came back and reported to all their peers, here's how it went. And that is invaluable for people that are doing this one time, to get the luxury of having all these peers that are going through the same thing and coaching each other, and will be a reference kind of in that go-giver, just mentality. It's I love, and investors love IT Nation Evolve peer group companies. They're benchmarking every quarter with service leadership that's exceptional. They are being kind of challenged by their peers, and being held accountable by their peers in the peer group for growth goals and other things like, and it's a great organic kind of M&A network. So like we're super big fans and invested in, you know, in the perpetual success of IT Nation Evolve.
Yeah. It's pretty powerful. Like you never used to hear that kind of thing. Like, you would hear they have a subgroup, any of the peer groups out there, right? There's MSP Ignite, there's, Encore, there's a lot of different peer groups out there, and they're starting to split them out, right? It's no longer just a principal having just, the ownership one, but now they have a service one, a service leadership and an operations leadership. And now they have an M&A group as well. People are starting to have M&A groups. It's a powerful testament to the knowledge that people are trying to gain to understand what they're doing out there.
No.
And having people like yourself, subject matter experts, go in there and give the knowledge freely and help people. That's why you're having so many people come to you and say, "Hey, Abe, help me out." Is my belief anyway.
Yeah.
Well, you're stopping. You're stopping that company from losing that 7 multiple.
Yeah.
Yeah.
Just by a bad day where somebody happened to leave. That's invaluable.
Yeah.
Yeah. The peer groups they've added, they're just now, or they're working to add, I think it starts in Phoenix, a COO group, which is new. And this year they've had a CFO group, and I was fortunate to get to do a lunch and learn with the CFO group. And that was really neat and helpful. Usually we'll host a dinner before we do the lunch and learn the day before. And I got to ask kind of everyone around the table what would be helpful. And so I tailored that to CFOs and controllers. Like, here's the pre-quality of earnings assessment is really important. Having your numbers be GAAP compliant, because the buyer is going to consolidate them and bid based on those numbers. What initial data requests are going to look like if your founder CEO gets approached and starts getting asked questions, and if you want to get those things ready. But yeah, when you can really get somebody as a specialist in one area and you can help them, and they have peers they can call, like, gosh, it's really, I've got to hand it to Arlen, who really created, brought the peer groups to this level where we are. I wouldn't be having success. Many of us would not be having success if it weren't for and these investors would not be, have the level of interest that they have if it weren't for all of these businesses really becoming much more operationally mature. And I think your collective effort on sales is really the next important wave in for existing MSPs and MSPs taking private equity. Like, over and over and over again, collectively, all the private equity groups, every time I run an auction, organic growth is more valuable than M&A growth. And I'll underscore that, organic growth. And in fact, I was working with somebody who's in the M&A peer group who's getting ready to sell. And he's saying, what can I do? And I said, organic growth. It's all organic growth, because even if you sign something up between signed LOI and close, I've had instances where we don't typically do this, but if it's material change in value of the business, if we can show that there's I've got one that's got 32,000 of new MRR coming on. That's really material to the valuation of the business. Absolutely. And they don't have to wait 12 months to have that on the books. If I can show it that if, we're talking about like kind of what can he do, and it was like, well, there's this buyer that is asking me all these questions, and he and I and you all know who this buyer is, isn't usually a high value buyer. And I'm like, he concluded, he's like, no, I don't really want to spend time with this buyer. I'll spend it from an organic, growing the business, anything in my funnel, kind of converting it. Like that, I mean, that is if anybody wants to increase their valuation, organic growth does it. I mean, that's it. And like I said, you don't have to wait 12 months for it to go through your P&L to show. You can be at transaction time just having signed it up and get credit for it.
And you've said that in the past, the fact that organic growth trumps, acquisition and bolt-on growth from a valuation perspective. It's definitely something that an MSP has to keep in mind. The focus is always on the service and delivery engine, but make sure that sales engine's primed too, right?
Yep. Yeah, absolutely.
Beautiful.
Okay.
Well, I think we're heading near the end of our time. Are we not, Rob?
We are, sir.
Yeah.
So, Abe, do you have any closing comments? Anything else you'd like to share before we wrap up this afternoon?
Let's see, prediction for this next year, like it is just a hunt for good, high quality assets, and especially those with nice organic growth. And if you're not involved in peer groups, please find one and get involved.
Yeah,
absolutely.
Yeah, those are the things that peer groups, like I hear over and over, you can do no wrong by joining a peer group. So peer groups are the way for sure.
Yeah.
Wow. This was a good one. I'm saying it. I'm throwing it out there. This is a good one.
Yeah. There it is.
Now it's officially an episode, right?
Well,
now we can make a line.
This one's true, right? Like you get Abe on here, and boom! All of a sudden, your knowledge just explodes. It's awesome. Hey, we will be including Abe's LinkedIn profile with the podcast, so anybody who's looking to get a hold of him will find it there. Also, this episode will be up on mspbusinessschool.com and anywhere that you get your podcast. We will try and send out a link with some of those slides, but if you want to see those slides, jump onto YouTube, check it out there, like, subscribe. We'd really appreciate it. And with that, fellas, I appreciate it, and I wish you guys happy holidays.
Yes, happy holidays
as well. Enjoy the holidays.
Great having you on again, Abe.
Absolutely.
Thank you so much. Greatly appreciate the opportunity.
All right.
Thanks, Dan. Thanks, Rob.
Thanks, Rob. Take care.